It's an honor, a true honor to be back at the Federal Reserve and to take up this duty at a time of such consequence.
Was there any discussion of a rate cut going forward today?
There was one proposal on the table. There was no discussion of any other proposals. The discussion on that proposal, I would say, was quite limited. The group was unanimous and unambiguous on it.
The Fed's new chair says only one single proposal was put on the table in his very first meeting. No alternatives, no real debate. The target was set from the start. That kind of clarity isn't what people usually expect from the Fed.
It has been the practice of this central bank and others to have a range of alternatives. Today we had one. I thought it furthered the discussion, deepened it, and made it clear what we needed to do and how we needed to deliver. I wouldn't prejudge what happens in the future, but there was only one big subject for us. We took it on. We had a good family fight on it for a couple of days, and we ended up, I think, in a better place. We're going to listen hard to what the experts say and make our own decision, but I can't give any forward guidance about what we're going to do next. The good news is we'll be meeting in 6 weeks.
He calls it a good family fight inside the committee, but right after, he adds that he won't give any forward guidance on what comes next. And that's exactly what the markets didn't want to hear.
For the last 2 days, and frankly, the first 3 weeks I've been here, they've been very open about changes. Change isn't easy, change is filled with risk, but our number one goal is to get monetary policy right. The way to get monetary policy right is to deliver on the remit that Congress gave us, to deliver on price stability, and there was no disagreement on any of those points. So the committee had a discussion of productivity today. AI came up. The way I thought about it before and socialized with the group is that artificial intelligence, the latest generation of general purpose technology, is perhaps as important a change in the economy and business and households that we've had in my adult lifetime. It is filled with both a huge opportunity and with risks.
In the middle of talking about interest rates, he suddenly pivots to artificial intelligence. He calls it the biggest economic shift he's seen in his adult life, and he openly admits it carries both huge opportunity and real risk.
AI is shorthand perhaps for American ingenuity. That doesn't mean that it's going to be easy. That certainly doesn't mean it's not going to be disruptive. But over the long term, my conviction, and I heard quite a bit of support for this around the committee today, is the United States is a winner as we go down this. The United States is ultimately going to be better off in that. Economic activity is expanding at a solid pace, despite elevated uncertainty that owes in part to the conflict in the Middle East. Productivity growth and capital investment, both strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little. We recognize that inflation has been running well ahead of the Fed's long-stated inflation goal of 2%. I, however, have refrained from offering any projections of my own, consistent with my long-held views on the SEP, at least as currently structured. In the median projections, real GDP rises at 2.2% this year, 2.3% next year, and total PC inflation runs at 3.6% this year, 2.3% next year. The unemployment rate stands at about 4.3%. The median participant judges that the appropriate federal funds rate to be at 3.8% at the end of this year and 3.6% at the end of next.
Here come the numbers. Inflation is still sitting at 3.6%, well above target. Yet the rate outlook drops to 3.8% by year's end. How both of those happen at the same time is the real question everyone's asking.
Each of 5 areas that are central to the broad conduct of monetary policy. First, Fed communications. Second, the Fed's balance sheet. Third, our use and reliance on existing data sources. Fourth, productivity and jobs in an era of transformation. And last, the Fed's inflation frameworks.
He's setting up 5 separate task forces just weeks into the job. It looks like he's questioning the Fed's entire internal structure from the ground up. Something that usually takes years, not weeks.
And last, the Fed's inflation frameworks. Inside of official statistics, I would be open-minded if the task force and our own best thinking had recommendations how those official statistics can be brought up to a standard of our time using new analytic methods. I'd also say this. Almost every private company CEO that's running his or her business are doing so with real-time information that isn't subject to much revision, that is telling them what just happened at that very moment. I'd like us to create a system where those blinders come off, where markets are following data that they efficiently think is reliable, and they'll be watching data, we'll be watching data, they'll come with better information through market prices to us. We can make more informed decisions with ultimately the goal that I said at the outset, deliver on the price stability objective that Congress told us to do and that we've got to get in the business of doing. My own view is our credibility comes from delivering on what we're saying we're going to do across everything we do. I've devoted more time in my first 3 weeks to monetary policy than all those things. But the more we deliver on our promises as good supervisors and good regulators, the more benefit we get, the more credibility enhancement we have in monetary policy. When we deliver on our price stability objectives, which we will, the American people will feel as though the hardships that they've been living through in part because of inflation in the last 5 years are in the rearview mirror, and that credibility will have dividends across what we do. You talked about one of our dual mandates on the employment side. I don't believe that we have a cruel choice. I don't share the view that was expressed a few generations ago that Federal Reserve chairmen show up at a podium like this and say, you got to choose. And you're going to have to decide whether you're willing to tolerate higher inflation to put more people at work. I don't believe in that.
And here's the most striking part. He's flatly rejecting the inflation versus jobs trade-off that Fed chairs have accepted for decades. In other words, he's signaling he's here to break the old rules.
What I believe is if we do our job, we can make strong growth, low prices, and strong employment mutually compatible. And so what you heard from the committee today is we've got some work to do on the price stability front.